How's it going, everyone? Hope everybody is well. So we're now at episode 6, which is insane to think that how fast we're actually getting through these episodes and how much you guys and girls are enjoying them. So really appreciate all the comments, all of the feedback, and we've got so much in the works to come. So for this particular episode, I've been really excited to film this one, and it is the 5 tips that are going to help you become a more successful trader. Now, although there are so many tips that we could cover, these are the ones that I think that are really going to propel people to a whole new level and give you that perspective. So I'm excited to get into those. So first up, be ready to take some notes. So first up, we're going to be talking about risk management. So risk management is something that at the very beginning of my journey, I was always taught good risk management. But after speaking to hundreds and hundreds of traders, I always hear people say things like, oh, I've blown a few accounts. Let me know in the comment section below, actually, if you have blown an account. But they say, like, I've blown 2 accounts. And I used to think, how? How on earth have you blown an account? Because if you're risking 1% per trade, you have to be wrong so many times to blow your account. What's happened? Even out of sheer fluke, you're going to catch some trades that play out, right? You just might be minus, up, minus, etc. But you might have a bit of drawdown, but blowing an account, that's pretty difficult. And it's because people are being taught things like, risk 5% per trade, risk 10% per trade. It is insane. It's nuts. Think about that for a moment. If you're taking trades, what they do is they think, oh, this trade feels good, so I'm going to take this trade. And let's say just do some basic maths, right? If we risk 1% on a trade and we take 10 trades, let's say 5 of those trades happen to be losers, right? We don't know what sequence at this point, but let's say 5 of those out of those 10 trades that we take are losers, minus 5. If we stick to an average risk to reward of 3%, so 3 times 5 equals 15, and then we've got 15%, take away the 5, we're with a net 10. So just basic maths, and we're wrong 50% of the time. This is not the best strike rate in the world at this point. Now, the reason why you might think, well, that's so simple, everybody can do that, basic maths, stick to that. Well, the truth is, the reason why people struggle is because on the trades that are playing out are going to be the ones that are probability trades, high probability trades, they cut them short from these imaginary barriers within the market. They think, I'm just going to close it out of all these emotions of fear, all of these kind of things within the market. That tends to happen. But the basic mathematics are there. But the reason why risk management is so important, because let's say, I've heard people say things like, well, do you know what, I'm not a high risk trader, I risk 1 to 3% on trades. Think about the maths on that. Don't play with the numbers, guys and girls, because when it comes to things like, let's say you want to risk 3% on the trade because this one feels good, you do, right, it's got this, I've built the case of evidence, that's a great trade, I'm going to risk 3% on this one. And you feel like, oh, this one, surely this one's got to play out. And this is when the ego's involved, right? So you risk 3%, and then let's say on the next trade, you lose that first one, minus 3. The next trade, you think you've got a bit of fear because you just lost 3%. This trade doesn't really seem that great, but it's still a pretty good trade. Still valid. It's a good trade. I'm going to take it. But I'm only going to risk 1%. And then that trade actually goes and plays out. And then you end up with, let's say, 2% profit. For whatever reason, you end up with 2% profit. You've won 1, lost 1. You've lost 3%, you've won 2%. Minus 1%. You're playing with the figures. By doing that, you're not thinking in probabilities. What you're actually saying to the market is, I know the exact sequence in which that I will have my winners and losers. So do you see what I mean? By playing with the numbers, that is doing yourself a disservice in your journey, and it's encouraging you to be emotional. Because I've seen so many people do that, and when they swap back to just, you're better off even just sticking to 3% all the way through, rather than playing with 3, 2, 2.5, etc., based off of what you feel has to happen, actually just stick to one number. But in Falcon, of course, we focus on that 1%. I was taught that when I was 18 years old, and I've stuck to that all the way through. So guys and girls, if you're a complete beginner getting into Forex for the first time, people say, oh, is it risky? You can lose loads of money. That's the individual. That's down to you. I can't control what anybody does, whether they want to risk 10%, 20%, or 30%. But to stick to one singular number, preferably in the low figures, 1%, it's going to serve you very well. So I hope that tip helps. So now moving on to tip number 2, which is journaling and ASR. So I'm going to combine these two because they go hand in hand. So what is that essentially? Well, journaling your trades, and ASR, which is advanced self-review. So by doing those two things, it is so important for your trading, because the reason why it takes a lot of people a lot longer to, kind of break through to consistency and become profitable is because it's likely you're not doing those things. How on earth are you going to know if you keep repeating the same mistakes just by taking losses? Because what you could do is say, well, I just keep losing, so that's what's going wrong. Well, there might be a specific little detail in your journal, in your ASR, that you're doing over and over again. So you need to see those trades happen over and over again, journal, ASR, so then you can actually figure out what is actually holding you back from trading. We've seen it time and time again by doing that. So journal your trades, have a simplified way of doing it. I've seen people do the most complicated journals where they're spending more time inputting things into their journal, which, you know, if you've done it before, let me know. But they actually spend more time putting things into their journal than actually trading themselves. Which, remember, your journaling is just for you to track your trades, to actually put that in. You can put things in like, you know, how you felt in the trade, your thought process, any kind of notes that you think that are going to, you know, help you along in your journey. But when it comes to doing your advanced self-review, which is the next part, you really want to get into as much detail as possible. You want to figure out, why did you take the trade? You know, what was you doing in that trade? How was you feeling in that trade? As many thought processes as possible, so we can then single out, is there a mistake that you're making over and over again? And if you find out what that mistake is that because you have a lack of clarity? And if you have a lack of clarity on that, does that mean that you need to watch something or figure out something on patterns, figure out something on, you know, trend lines or candlestick formations, whatever it may be, whatever strategy you trade? We can then target that and then fix what the problem is. But if you don't journal, if you don't ASR in the first place, and you just come to somebody and say, whoever you're learning from, you know, I just keep losing, but I don't really know why, the majority of the time you can figure out why you're going wrong yourself. And how you do that is by journaling and ASR. So I highly recommend it. You can do it through Evernote, you can do it through, you know, spreadsheets, whatever you want to do it, you can write it down. Just keep a track of your trades so then you can see that. So for example, one thing that I noticed for myself is that, and I mentioned this in the recap in Falcon's recap recently, euro dollar long. So many trades, right? For some reason, I've noticed a pattern that the majority, I would say 90% of trades that I take on euro dollar long, they seem to end up in pretty much a break even or a tiny loss if I was to average it. Yes, there are some winners as well, but literally such a high percentage are euro dollar long. They seem to be, you know, losers or break evens. And now I can see that detail and, you know, review my own self. You never become complacent no matter how good you are. So by doing that, I'm able to be aware of it. I used to notice that when I take a certain type of strategy, we call it a reduced risk entry in Falcon, when I take a certain type of reduced risk entry on pound Swiss, I was always tagged in and tagged out. And I realized that there was a particular behavior on that currency pair that enabled me to tweak, well, if I don't want to keep taking those style of entries, how can I still capitalize on the bigger moves? Well, then I adjusted it and I took a different style of entry. So I know already on a subconscious level, if I trade pound Swiss or if I trade something like euro pound, I'm going to go for a different type of entry. And ASR and journaling helped me to do that, which of course helps your performance. So I highly recommend that you do it and let me know how you get on. Let me actually know how you're journaling and ASRing and how you're self-reviewing at the moment in the comments below. So next tip that we're going to be looking at is the possible versus the probable. So what is that exactly? Well, essentially this is something that I use within Falcon a lot. It's a term that I came up with quite a few years ago to really help me with the psychology of the market. I always used to look for these, you know, kind of high probability trades, and then trades would still play out very, very nicely and I wouldn't be involved in them. And I realized it's because I was waiting for this kind of perfectionist. The market's imperfect and I was waiting for these perfect conditions. So that's why I came up with the possible versus the probable. If you hear that, then you probably hear a lot of Falcon members talking about it for a very good reason. It helps us to stay in a more neutral mindset. We know that this is the most likely outcome, which is the probable, but this is what is possible also. And if what is possible, is there a high enough criteria that enables us to still get involved in the market? And there is. So that really helps us stay on top of the market. And you can do this whatever strategy that you're trading right now, so it's relevant to you all, and it's going to help you to become more of a successful trader, because no longer are you going to be waiting for the market to, oh, it has to do this, it has to do this, has to do this, or I won't take the trade. There's nothing wrong with being diligent and, you know, having a good criteria. But at the same time, the market doesn't always have to do what you want it to do, and there is other things that you can still capitalize on. Let's say, for example, we're looking at a trade that we're in right now, pound CAD. So pound CAD, we were talking about pound CAD in the webinar just a couple of days ago. So I'm in pound CAD short at the moment, and essentially this ties in with something that we called forecasting. So when it comes to pound CAD, it fits quite nicely because I'm in pound CAD at the moment, and I'm just about to move it to break even actually because of the structure that we're looking at. Of course, as you know, in Falcon, if you wouldn't have known by already, right now we focus on patterns predominantly. So what I'll be doing is moving that to break even as it's in an appropriate area. We're over 1% profit, and I'll be targeting that particular structure. Now, quite simply, when it comes to this particular pattern, the reason why I was able to get involved in the market is because I was thinking in that possible probable mindset, because this structure had the ability to go much higher, which was the probable, but the possible was this expanding formation we have here has a high enough criteria, it's at the top of this particular structure, and we can still take advantage of it. I used to do this so many times where I would see this because I was good at reading price action, and these trades would just completely take off, they would plummet, and I wouldn't be in them. And so that's what helped me, the possible and the probable. Essentially, this trade is the possible. The probability was that it was going to go up a little bit further, but the possible was that it didn't need to, there was an override, there was still a high enough criteria that we could capitalize on, and we did. So at this stage, we move it to break even, and we're thinking in that probable and possible mindset. Now let's take it one step further and talk about forecasting. So what is forecasting? Forecasting is, they tie in really nicely. So essentially you are forecasting the probable and the possible outcome. The reason why we forecast, and you can do this whatever strategy that you trade, you can't just think that, right, when it gets to that area, or say if you trade support resistance, it's probably the most relevant to people that trade in that kind of way. Let's say that you have a resistance and that you're saying, when it gets to that resistance, I'm interested. There's a big reason why when people say that, they end up not capitalizing on a trade, is because they're only saying that. You need to know when it gets to that area, how is it going to get there? What are you looking for when it gets there? What are the possible and the probable outcomes that it can do, and how are you going to capitalize on it, how are you going to manage it, how are you going to exit it? All of those types of scenarios. And forecasting ties in. There's a reason why the majority of the big trades that we take within Falcon, they are forecasted. Falcon community, you know exactly what I'm talking about. They are forecasted months, sometimes months in advance, but weeks at least. We know the biggest positions, pound CAD, we've been talking about this for a while. We know way in advance to capitalize on those positions. So by forecasting, and if you're a trader, you want to make sure that whatever strategy you're trading, that you have got the probable and the possible, and you're also combining that with forecasting. Let's actually take a look at some forecasting right now for what we're looking at within the market. So I've just moved pound CAD to break even, so that makes sense. And now if we go back to the daily structure, so for example, my risk reward on this, I'm looking at about 19%, I believe. So first target around here is 7.5. Bigger structure that we're playing on here is just under 19, so about 18.8, potentially about 19 actually, that's fine. And we could go to the complete outer structure, which is much more, but even just targeting the beginning of this correction, this is a type of strategy that we focus on within Falcon. So when it comes to this, if I know that I'm looking at pound CAD from here to the downside, and I'm just hoping or thinking, well, it has to do that, I'm not planning for the possible and the probable outcome. So what I'll do is I'll go down to the 1 hour and I'll take a look at the structure, and I will have things like this in place. I can now start to mark on this particular channel, and I can see that we're in this ascending structure right now. And within this ascending structure, we have a very high percentage of a time that if this breaks very aggressively and impulsively, it will have a very, very high percentage that it will get to the beginning of this low. Of course, you know, there's a lot more explanation on that, but just to give you a little bit of a detail, it's a very, very high probability we'll get to this low, which is why our initial solid target will be around 19% for that reason. If it goes further, perfect. If not, we know that's a really great area to be exiting the trade. Now, we're also very aware that just because we're in the sell right now, it doesn't mean that it has to drop here. It doesn't have to drop there. And what are the probable and possible outcomes? Well, it's also possible that we can have an extension of that channel. Let's just hide this for a moment so you can see. We can have an extension of that channel, and this can creep its way all the way back up to the top, which essentially would take me out for, at this point, break even, as I've moved to break even, and then still drop out. Now, why is this important to you as a trader? Well, if you didn't do that and you was leaving it open for the full 1%, you're just hoping that it's going to play out. Far too many people, they'll let these pullbacks happen. It'll go all the way like this, and they'll say, it just didn't work out. And they take unnecessary losses, and then they don't take the trade that ends up playing out. Now, you would be protected if you was thinking about, this is the most probable outcome, this is the possible. And then essentially that's what forecasting is, because you're combining it. So what I would do in this situation, I would be thinking, well, what else am I looking for to potentially scale into the market? What would give me the signal for that? Because the only signal that you really want to be taking is one from the market. And I'll be looking for continuation. So we get continuation, essentially that's a hover. A hover is one of our strategies that we have within Falcon. We would see that as a hover within that area, and we'd see that dropping out and then forming more continuations. And there's certain types of strategies and criteria that we take to enter them. So essentially we'd be forecasting those. We're well aware that it goes up to here. If it goes up to here, is there something that we'd be looking for within this area that would still enable us to get back in? Yes, there is. And that's where strategy comes involved in it. Having direction, so many people can pick direction, but actually having the possible, the probable, the outcomes, and actually understanding how to capitalize on them is another thing. So I know that's a slightly longer-winded version of the possible and the probable, but this can help you no matter what strategy you trade. Of course, this is something that I discovered in Falcon, and I realized this is the term that helps me, and now I can help other people with that term because it helps them to think in that, possible and probable mindset, which keeps you more neutral, and then you're not frustrated, because what happens is people will take a trade, for example, and it won't play out exactly as they planned or they, forecasted in their mind, and because it didn't happen in the way that they wanted it to, they get frustrated and upset. But by doing this, you're then going to say, if that happens, so right now, if that creeps back up, I'm already prepared. Psychologically, I already know what I'm going to do next. And you need to be in that trader's mindset before that happens. You need to know what you're going to do, how you're going to do it, when you're going to do it, where you're going to do it. It's so, so important. So I hope that helps, and I highly recommend that you go check that out and that you do that. And let me know how you get on if you do start forecasting, and let me know, how that improves your overall trading. So tip number 4 is time blocking. So in this particular tip, this is so, so important. It's something that helped me within my progression as a trader so much. And quite simply, how do we time block and why is it important? Well, it's important because far too many people, when they're learning something, especially when it's becoming a more successful trader, you need to learn content, right? You need to have focus, and we get distracted by so many things. I'm sure you'll be guilty of it. I am sometimes as well. But what helps me is time blocking. So what I do is I focus on one particular task, hyper aware in that one period of time. So how you can do that in your own, journey as a trader is that whether it's watching content or maybe reading a book, what you want to do, put your phone on airplane mode and actually focus on that particular task rather than scrolling through Instagram and doing something else. Literally watch and take notes, or listen and take notes, whatever it may be that you're doing, is literally focus on that one task at that one time. Watch how you learn much quicker. You're going to absorb that information much more on a subconscious level, which will improve your trading. And that way your attention to detail is going to be so much better. Far too many traders, what they do is they think they've put in the time, they think they've worked hard, but the truth is, how much of your focus have you really given that particular content? So if you are a trader and you want to become more successful, one key ingredient is making sure that you're actually utilizing the time that you're learning to actually focus. Some of you might have kids, some of you might have businesses, some of you might be working offshore. And it's important that you use your time wisely. And something that helped me massively is time blocking. Let me know if you already do that, but it's a key ingredient for success as a trader. I'm a big believer in that. So tip number 5. So tip number 5 is set goals, not deadlines. Now I'm so big on this around setting goals and not deadlines. The reason is, especially if you're wanting to become a more successful trader, the worst thing you can do, and I see so many people do it, they set things like percentage goals, they set things like monetary goals, and they set goals on when they should be consistently profitable, and you just cannot do that. It takes as long as it takes. It's a different journey for every single person. But what you can do is you can set goals on measuring your progression. So what we do in Falcon, and you can do this as well, doesn't matter what strategy you're trading, you can set goals on measuring your progression every 90 days. So essentially what you do is you're reviewing your progression every single 90 days. So rather than you setting, right, I set a goal to be a consistent trader in 6 months and then it didn't happen, then you get upset, frustrated, oh, it didn't work out, etc. No, you're setting deadlines on something that you cannot set a deadline on. You will have your breakthrough moments at different stages of your journey. You'll be at a different level of consciousness every single time that you learn a particular part of trading. So it's so important to set goals based on measuring your progression, because then what you can do, let's say you do the 90-day plan, every single 90 days, you can then say, right, how much have I learned? What else do I need to know? What are the extra 1% tweaks that I can make that is ultimately going to increase my overall performance? That way, it's so much more positive, it's so much more empowering, and then you're not overthinking everything, because what people do is they overlook all of the progression that they've made, and they fail to realize, do you know what, I actually know a lot of stuff. I really know my stuff now. Now what I need to do is make those relevant tweaks, and then slowly, those 1% tweaks are going to make a massive change in my performance. So the biggest tip, and I wish I had these tips, I wish someone could tell me and guide me to, give me these processes, so I'm not focusing on all these other things. So measure your progression. So no deadlines, guys and girls, set goals, and it's so much more important. And overall, I really hope you've enjoyed this episode. Now, although I could give you so many more tips, I think that these are some really, really key important things that are overlooked sometimes or overcomplicated that you can do in your trading right now, and that is going to improve your performance. I would love to know if you do that, and what kind of breakthrough moments that you have. And if you had any actually breakthrough moments in this episode, let me know in a detailed comment below. I'd love to know your number one takeaway and any other things that you would love me to talk about or dive into. I'm more than happy to create those videos. But I hope you've been enjoying the episode so far. And for right now, I'm just actually heading to a particular development. A lot of people have been asking me recently, do you just trade? Do you just stay in front of the charts? No. So it's an illusion to people that they think that traders, they just stay in front of the charts all day, every day. Scalpers, they might do that, but we don't. It's so important to do other things as well. I tend to get involved in things like property. That's actually where I'm going to now. I'm actually a silent investor in this particular property, but where I like to be hands-on, I like to get involved in it rather than just invest in it. So I'm heading up there now. The foundations are in, so I'm keen to just see the overall site again, and I enjoy going up there. So guys and girls, have an incredible end to the week. We'll be bringing you more episodes soon, and we've got some exciting plans to share in the next episode. Have a great week, and I hope you took a lot of value from this episode.